In today's show, Bitcoin is cheap at $20,000 as the Bitcoin price to wallet ratio mimics 2013. Quoting Jurrien Timmer, the director of global macro at asset manager Fidelity, it is the middle of summer, but for crypto, it is winter. Bitcoin and crypto in general have not been spared from the widespread drawdowns this year, and that's an understatement. I'll be sharing this Twitter thread and quoting James Lavish at $20,000 Bitcoin. If you believe that the downside risk is $10,000 and the upside potential is $250,000, then at these prices, there is a 0.5x downside and 12.5x upside. This is a 25-to-1 reward to risk profile. This is compelling. And quoting Plan B, what if the bears were wrong and forced selling, liquidation of Luna, Celsius, and Three Arrows Capital, etc. was actually the capitulation event? And also this just in, Rockefeller International chairman says Bitcoin comeback will be like Amazon in the 1990s. The dependence on the US dollar cannot continue. Also in today's show, breaking news, Elon Musk wants to terminate the $44 billion Twitter takeover. Here is a letter that his lawyers sent to the SEC. In short, Twitter has not provided information that Mr. Musk has requested for nearly 2 months, notwithstanding his repeated, detailed clarifications intended to simplify Twitter's identification, collection, and disclosure of the most relevant information sought in Mr. Musk's original request. Also in today's show, I'll be sharing with you a biblical Adam and Eve Bitcoin pattern which suggests the Bitcoin price can rise 30% by October, as well as crypto's second richest billionaire, the FTX CEO, believes the digital asset market has bottomed out and explains why. Also in today's show, top crypto trader says massive unexpected Bitcoin rally to take place this year and shares his target. Quoting Credible Crypto, still expecting a new all-time high in six-figure Bitcoin price by 2023 and believe we're likely back on our way down in 2024, 2025, and in the depths of a bigger bear market than most have ever seen at that point. And as Calio shares here, late 2024, early 2025, we finally see a new Bitcoin all-time high in six-figure BTC, and he clarifies, I think Bitcoin does go higher than what this chart shows at $110,000. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. The goal is to get to 100,000 subs. If you like getting at crypto, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, including weekends just like this. And today's episode is brought to you by iTrust the #1 crypto IRA platform in America with over 5.5 billion in transactions and over 175,000 accounts created. And as you can see here, they have over 2,000 plus 5-star reviews. So when it comes to trading crypto tax-free, look no further than iTrust. I also like to point out that there are no setup fees and no monthly fees, and transaction fees are only 1%, truly making this a no-brainer. And some of the crypto assets you're allowed to trade are the most popular, including Bitcoin, Ethereum, Chainlink, Polkadot, and some of their new ones more recently added to iTrust include the Graph, Axie Infinity, Decentraland, Avalanche, Polygon, and Tezos. To take advantage of this, use my referral link in the description right down below and claim your bonus of up to $100 in Bitcoin. And let's get this crypto tax-free. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. How's it going, crypto fam? Make some noise in the live chat. Hopefully you're having a pretty amazing weekend thus far. Bitcoin has not been this good of a value since its cost of $1,130. One analyst argues as the king crypto offers a compelling risk-reward ratio. That's right, in a new Twitter thread on July 7th, Jurrien Timmer, director of global macro at asset manager Fidelity Investments, simply described $20,000 Bitcoin as cheap, and I agree 100%. Now, while fears that the crypto market could suffer further drawdowns this year remain, some believe that the current Bitcoin price levels offer the kind of value for money not seen in years. Analyzing the Bitcoin price versus the number of non-zero addresses, wallets with a positive balance, Timmer concluded that Bitcoin is now back at where it was at the peak of the 2013 bull market. At the time, Bitcoin managed to hit around $1,130 before spending several years consolidating thanks to the demise of exchange Mt. Gox. And quoting Jurrien Timmer here in this thread, it is the middle of summer, but for crypto, it is winter. Bitcoin and crypto in general have not been spared from the widespread drawdowns this year, and that's an understatement. So let's see where things stand. At its recent low of 17,600, Bitcoin is now below even my more conservative S-curve model, which is based on the internet adoption curve. And looking at Bitcoin's network growth, it is clear that the adoption curve is tracking the more asymptotic internet adoption curve rather than the more exponential mobile phone curve. Per Metcalfe's law, slower network growth suggests a more modest price appreciation. However, based on a simple power regression line, Bitcoin's network appears to be intact. That continued growth in the Bitcoin network combined with lower prices means that Bitcoin's valuation is coming down. I used price per million of non-zero addresses as an estimate for Bitcoin's valuation, and the chart below shows the valuation is all the way back to 2013 levels, even though the price is only back to 2020 levels. In other words, Bitcoin is cheap, and if Bitcoin is cheap, then perhaps Ethereum is cheaper, and if ETH is where Bitcoin was 4 years ago, then the analog below suggests that Ethereum could be close to a bottom, the end. So there you have it. Let me know if you agree or disagree with the crypto analyst. Now, a $20,000 Bitcoin price should meanwhile still provide a compelling investment case, even to those who believe that a 50% price dip is still possible. That was the conclusion of James Lavish, a former hedge fund manager turned macroeconomics expert who drew attention to the simple math involved in a Bitcoin bet in today's environment. As he shares here, at $20,000 Bitcoin, if you believe that the downside risk is $10,000 and the upside potential is $250,000, then at these prices, there's a 0.5x downside and 12.5x upside. This is a 25-to-1 reward to risk profile. This is compelling. And Breadman responded, the downside is not concerning, but wasting dry powder now when it might be able to buy 2x as many Bitcoin later is definitely a concern. We'll continue to dollar cost average diligently with dry powder ready in case of a big drop. And James Lavish responded, I don't disagree, but if you're still on zero and you believe the downside and upside potential above, it makes sense to start accumulating a little here, in my opinion. And he makes a great point. And while it may be hard to imagine that this year we see a $250,000 Bitcoin price, we have billionaire venture capitalist Tim Draper, who nonetheless initially insisted that Bitcoin would cost $250,000 by the end of 2022 or by early 2023. Let me know if you agree or disagree with the billionaire venture capitalist. And quoting Plan B here, what if the bears are wrong and forced selling, liquidation of Luna, Celsius, and Three Arrows Capital, etc. was actually the capitulation event? And he also recently shared the results from his recent poll where 85% of the people think we will see a new all-time high in the next 4 years. Obviously, I personally feel that is extremely conservative. And quoting economist Holger, this chart shows why the euro crashed to near parity with the dollar this week. Eurozone's trade surpluses have been completely wiped out because of the energy crisis. Germany has slipped into a trade deficit for the first time in 31 years. Shortfalls in trade were also observed in France and other countries. And this just in, the Rockefeller International chairman says Bitcoin's comeback will be like Amazon in the 1990s. The dependence on the US dollar cannot continue. Facts. And before I break down next breaking story of the day, Elon Musk wants to terminate his $44 billion Twitter takeover. But first, let's take a quick look at the overall crypto market. As you can see, all the major cryptos are currently pumping and in the green. We got Bitcoin up almost 2% for the day. We have Ether up 1.4%, trading just above $1,200, while Binance Coin, XRP, Solana, and Polkadot are all pumping and in the green. But all right, now let's break down our next story of the day. In an unexpected turn of events, Tesla CEO Elon Musk announced his intention to end the $44 billion Twitter deal via a letter sent to the board of the social media giant. In short, the world's richest man is not happy with the lack of information that Twitter provided about spam and fake accounts. And according to the letter, which is addressed to Twitter's chief legal officer, Musk is terminating the merger because Twitter appears to have made false and misleading representations, which Musk used as a reference point for his decision. Elon initially agreed to purchase the crypto-friendly social media platform for $54.20 per share, which is about $44 billion in cash. Like, whoa. And the board of Twitter was happy with the decision, unanimously voting in favor of the deal, which would make it a privately held company once again. However, the letter filed to the SEC argued that Twitter was not very clear about two crucial data points: Twitter's process for auditing the inclusion of spam and fake accounts and monetizable daily active users, as well as identifying and suspending such accounts. The social media giant was reportedly secretive about the daily measures for the last 2 years. The letter reads, in short, Twitter has not provided information that Mr. Musk has requested for nearly 2 months, notwithstanding his repeated, detailed clarifications intended to simplify Twitter's identification, collection, and disclosure of the most relevant information sought in Mr. Musk's original request. The letter then claims that Twitter is breaching two sections of the merger agreement. The letter says that the social media company has been on notice of its breach since June 6th, and any cure period afforded to Twitter under the merger agreement has now lapsed. However, the Twitter board is definitely not happy with Elon terminating the agreement and abandoning the transaction. In a tweet, Twitter chairman Brett Taylor said that the board is looking to close the transaction on the previously agreed price and will pursue legal action if necessary. Quoting him here, "We are confident we will prevail in the Delaware Court of Chancery," Taylor wrote. And in April 2022, Elon revealed his intent to remove all spam and scam bot accounts from Twitter if his $44 billion offer was to be accepted. His master plan is to improve the social media platform and also included introducing new features like the ability to edit tweets and view the edit history. I would personally love that feature, to be able to edit tweets. I think that'd be pretty clutch. Now, over the past several years, Twitter account hacks and bots have contributed to numerous scam and phishing attempts. And as of the latest, Yuga Labs co-founder, synonymously known as Gordon Goner, issued a warning about an orchestrated attack on its social media accounts while alleging the involvement of a Twitter insider. And previously, the Binance CEO CZ said his crypto exchange Binance had committed $500 million to co-invest into Twitter along with the world's richest man. So there you have it. What are your thoughts surrounding Elon Musk purchasing Twitter? Do you feel he will be forced to make the acquisition as he originally intended, or do you feel he is likely to back out with no repercussions whatsoever? Let me know your thoughts in the comments right down below. And before I break down next story of the day, and I share with you this biblical Adam and Eve Bitcoin pattern, which suggests the Bitcoin price can rise 30% by October. But first, let's take a quick look at the overall crypto market cap, sitting above $955 billion, with $85 billion in volume in the past 24 hours. The current Bitcoin dominance is 43.1%, with the Ether dominance at 15.5%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have ICP leading the pack, up almost 15%, trading at $6.96, followed by Quant, up 14%, trading at $73.55, followed by Uniswap, up 13%, trading at $6.34. And checking out the top 100 cryptocurrency gainers for the past week, you can see a sea of green with CVX leading the pack up 54.8%, Quant up 35.8%, and CRV up 35.8%. And checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we are currently rated a 24 out of 100 in extreme fear. Yesterday a 20, last week a 14, and last month an 11 in extreme fear. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That could be a great buying opportunity, aka BTFD, buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. But all right, now let's break down our next story of the day. While Bitcoin may be down 70% from its November 2021 peak of $69,000, its rebound move in the past 3 weeks is raising the possibility of more upside in quarter three. Let's go. At the core of the bullish argument is a technical pattern called the Adam and Eve. Notably, the structure appears when the price forms two bottom and recovery cycles. The first cycle, called Adam, features a pointed bottom, while the other, called Eve, is round shaped. Also, the peaks of both cycles form a common resistance line. The Adam and Eve pattern resolves after the price breaks above the resistance line, accompanied by a rise in trading volume. And as a rule of technical analysis, the breakout's target typically comes at a length equal to the maximum distance between the pattern's lowest point and resistance line, which you can see here in this chart. Now, given the technical descriptions, Bitcoin has been nearing an Adam and Eve pattern breakout, and suppose the price closes above the structure's resistance line, then its likelihood of continuing its rally towards 28 to 28,500 will be higher. That amounts to over a 30% rally in quarter three of this year when measured from the current price level. But on the larger time frames, however, the Adam and Eve bullish structure appears in conflict with another technical setup that suggests more pain ahead for Bitcoin in the days ahead. Dubbed an ascending triangle, the continuation pattern forms when the Bitcoin price consolidates inside a horizontal trendline resistance and rising trendline support following a sharp move higher or lower. And interestingly, it appears to be forming on the daily candle chart after Bitcoin's downtrend, suggesting more downside is likely as the price meets overhead resistance, as shown right here in this chart. And this ascending triangle's bearish scenario is eyeing the $16,000 to $20,000 range, depending upon the breakdown point. So let me know if you feel the Bitcoin price is likely to break out to the upside or downside here in the short term. Let me know in the comments right down below. And before I break down next story of the day, crypto's second richest billionaire, Sam Bankman-Fried, believes the digital asset market has bottomed out and explains why, as well as top crypto analyst says massive unexpected Bitcoin rally to take place this year and shares his target. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 1,200 plus videos right here on my YouTube channel. Also, some very helpful resources for you to plug into, including my crypto merch store live at merch.cryptonewsalerts.net. Also, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, just like this. Also, you can find us on all the major podcasting platforms, from Spotify, home of the Joe Rogan Experience, to Apple's iTunes and Google Play. And if you're listening to the podcast, be sure to check out the YouTube channel at cryptonewsalerts.net for the full premium experience with video. And of course, you can follow me on crypto Twitter, Facebook, Telegram, and TikTok. So wherever you're at, be sure to plug in and follow me there. But all right, now let's break down our next story of the day. FTX chief executive Sam Bankman-Fried is weighing in on the state of crypto after a rocky month in the crypto markets. In a new interview with Real Vision, Bankman-Fried tells host Raoul Pal that it is possible that the prices have finally bottomed out, noting that other investment classes have also seen shakeouts recently. Quoting him here, "I don't see any particular reasons that we couldn't be at the bottom, and I'm not trying to say that we are definitely at the bottom, but I think the unwinding that had to happen has happened. It has been extremely messy last month. Obviously, one of the interesting things is that this hasn't been just a crypto phenomenon. When you look at what's happening in the markets, you see similar things happening in tech and to some extent happening all over the ecosystem, where you basically just have a really large retracement of all the gains that have happened over the last year plus in the markets." Now, the CEO, who Forbes ranks number 2 on its list of wealthy crypto personalities, attributes the latest market wipeout to the Federal Reserve, not only raising interest rates, but setting them higher than most investors expected. As he shares here, it was sort of triggered by the Fed, initially by the expectation that rates were going to finally really start rising, and then rising more than people thought. But at this point, the currents we have seen in the markets, I think, is out of line with what 3% interest rates would normally represent. Now, Sam Bankman-Fried concludes by noting that Bitcoin dropping below $30,000 back in early June was likely caused by broader economic factors and is not isolated to issues within the cryptocurrency space. As he shares here, "I think you look at the drop down to $30,000 in Bitcoin as really being just economically driven and driven by macro that wasn't very crypto specific." Let me know if you agree or disagree with the crypto billionaire. And to watch this video, Sam Bankman-Fried did what Raoul Pal. Check the show notes below the video in the description. But all right, now let's break down our final story of the day, the moment we've all been waiting for. One crypto analyst maintains a contrarian bullish stance on the king crypto for the rest of the year, despite a dramatic drop from all-time highs. The closely followed crypto analyst, Credible Crypto, tells his 336,000 Twitter followers he foresees Bitcoin hitting all-time highs in the next 6 months before the real bear market begins. Quoting him here on crypto Twitter, "Still expecting a new all-time high in six-figure Bitcoin price by 2023, and believe we are likely back on our way down in 2024, 2025, and in the depths of a bigger bear market than most have ever seen at that point. Kudos to Calio if he is right and I am wrong. Time will tell." And based on Bitcoin's current price of $21,600 and the all-time high at $69,000, the analyst is expecting roughly a 219% explosion in less than 6 months. Send it. Now, Credible's 2022 bull run prediction contrasts with many in the space, including fellow analyst Calio's forecast of a long bear trend that finally leads to rallies in late 2024, 2025. Checking out Calio's tweets here, "Bitcoin roadmap to a new all-time high." Added a bit more detail than the last time I shared this. "Most likely path from here is seeing a base range between $16,000 and $30,000 established that eventually resolves around December when the price finally breaks above the high time frame diagonal resistance. Expecting a few months of rapid overhyped growth in early 2023, which does not result in a new all-time high. Capping out somewhere in the 50s makes more sense, but this growth should have an associated mini alt season next 18 months or so through the next halving in March of 2024, defined by a crab market staying above the high time frame resistance, logarithmic support. While Bitcoin remains in a crab market, new alt narratives start to spring up and the NFT market starts to pick up steam. Late 2024, early 2025, we finally see a new Bitcoin all-time high in six-figure BTC. The NFT craze in 2025-2026 will be unlike anything we have ever seen before. I want to clarify, I think Bitcoin does go higher than what this chart shows at $110,000, but even if that's all we see, that's still 5x plus from the current prices in less than 2.5 years. That's not bad at all. Might even just be enough to outpace inflation. And according to Credible, if the adoption of crypto technology is anything like that of the internet, then investors in the space are very early. He quotes an excerpt from a report by Wells Fargo that compares the crypto adoption to the rise of the internet. Quoting them here, internet use surged from 77 million in 1996 to 412 million in 2000. By 2010, internet use had grown to 1.98 billion and today sits at 4.9 billion. The number of global cryptocurrency users reached 220 million in June 2021. You are early. Be patient. Touche. Let me know if you agree or disagree with the crypto analyst. And do you agree more with Credible Crypto that we're likely to see a new all-time high six-figure Bitcoin price by 2023? Or do you agree more with Calio that we're not likely to see that six-figure new all-time high until late 2024, early 2025? Let me know in the comments right down below. Now for the top 3 comments from yesterday's episode. Digital Gravity wrote, "Great show, JV. I don't know what the short-term price of Bitcoin will be, but I do know one day we will miss being able to stack sats at these prices. Dollar cost average is the way." 100% with you on that, fam. Now 'tis the season to be stacking sats. Hodl. Our next featured comment comes from Inner Dino. "Thanks, JV. Excellent show. It's not hopium, it's fact. $100,000 this fourth quarter. Let's freaking go. Bitcoin, see y'all next time. $100,000 Bitcoin this fourth quarter. Sounds amazing to me. Send it to the moon." And our third and final featured comment comes from BitBud. "I gotta show him some love and respect because he actually called this crypto collapse a long time ago here on the channel, and he just recently wrote $25,000 to $28,000 before we drop to 12K. Spanish flu/COVID, same 100-year cycle. Depression will start in 4 to 5 years. So there you have it. And to be featured on tomorrow's episode, drop me a comment right down below.